In today's episode, I want to share with you one very specific turning point that I had in my journey to become a consistent, confident, and profitable trader. This actually happened many years ago. It was in 2017. And prior to that, I'd been making money and I had just started my small account challenge on January 1st of that year. But I felt like I was in a cycle. The cycle was that I was swinging for home runs and I kept having big strikeouts. I would take these really big losses, and the result was that my equity curve would periodically experience these big dips. And whenever I would have these dips, I would feel like I needed a home run to get my account back to whole. So I would continue swinging for these home runs, but it was like I was on this roller coaster where I kept having these big dips. So after one particularly bad loss, and this was in September of 2017, I decided to take a look at the last 10 months of my trading data, and I made a discovery that I want to share with you today. From that discovery, I implemented changes in my strategy that have significantly altered the trajectory of my trading career. Now, as we know, 2020, 2021, 2022, the market was crazy, but I was still implementing the same lessons that I learned from this very specific moment in time where I made this discovery. So let's go ahead and jump into the data here, and I'm going to start walking you through what I learned. Okay, so if we look at the month of September here, it's probably clear to you that it was a red month. I was down $4,400, which, you know, at the end of the day is not a crazy amount of money to lose, but it's definitely disheartening and it's frustrating because look, I showed up every single day. I'm showing up to trade, but I'm not walking away with consistent profit. Now, at this point in the year, if we take a step back and I don't know if we'll be able to easily in this calendar view, but it was a good year in total. I had a great start, January, February, March. April was good. May was fine, and then it did slow down in June, July, and August. So I had sort of some slow summer months, and then coming into September, I started with, I guess in this case, it was first day of the month with a $4,000 red day. So now I'm digging myself a hole, and I'm sure many of you have experienced that. Then we have a Memorial Day weekend. I come back, get a trade on Wednesday. It's a red trade. So now I'm down 8,000 on the month. No trades Thursday, trying to be disciplined. Small trades Friday, still red on the week. So now 2 red weeks in a row. I come back for the next week, the first full week of September, and you can see I got nothing to show for it, right? I'm red again this week, not by a lot, but I'm feeling frustrated. Now, the third week of the month, I got into a little bit of a groove, made some progress, did really well, and then boom, in 2 days, literally gave back everything I had just made in that last week. So this is where on this day right here, I was like, all right, man, take a step back. Because this was one of those days where I was ready to flip my desk. I was so frustrated. I wanted to throw my laptop out the window. I was just like, I'm done. I was so angry. I'm sure many of you can relate to this who are active traders. The emotions can get big. So after I had this meltdown, just so angry, I was like, okay, well, take a step back and slow down. Because you know what I did several years before that, when I had a big struggle, a big kind of blow up loss, I went back and I looked at all my metrics. And that was when I discovered the momentum strategy that I still trade to this day. So I said, let's do that same thing. Let's go back and look at the data. So this is what I did. I looked at the previous 10 months of data and I made some discoveries. So one of the things I noticed when I looked at my top, my last 10 months of data was I looked at my top 25 biggest winners and my top 25 biggest losers. So my top 25. So top 25, my biggest winners amounted to $215,000. And my biggest losers amounted to minus $203,000. So this was over the last 10 months of trading. And this actually kind of surprised me. And I'll tell you why. I had the belief that my success depended on hitting home runs. I periodically would have a day where I was up 15,000 or 20,000 or something like that. So, when I was thinking about my top 25 biggest days, I was thinking those would probably be anywhere from 250 to like $300,000. So I was a little bit surprised that my top 25 biggest trades were only 215,000 because it means they were averaging less than $10,000. That kind of surprised me. And then what surprised me even more was that the losers, my top 25 biggest losers, were also averaging close to $10,000, just under, and I had lost 203,000. So in other words, if you took away my top 25 biggest winners and my top 25 biggest losers from the last 10 months, what am I plus and minus? Like 12 grand, right? Plus and minus, $12,000. It's not a lot of money. So I was like, wait a second, because here's the thing. I knew that over the last 10 months, I had made around $300,000. So I was like, if the profit didn't come from my top 25 biggest winners and losers, then where did it come from? Okay, so let's set this to the side. So what we know is that the top 25 biggest winners and losers amounted to only 12,000 in profit. These are trades where I was objectively swinging for the fences. I was trying to get a big win, but sometimes those big swings, it's a big strikeout, and that's why I had the losses. So, if you think about, for instance, one of these trades that maybe I took where we had a stock that was kind of squeezing up the scanner, moving higher, it pulls back, just for a moment, then it pops up right here, and I get in it, I'm in it, and then immediately we have one of those kind of jackknife candles, right? And maybe this is like a 10-second chart, and on the 1 minute, it's just like a big, either topping tail doji or even a shooting star doji. So it's just like, I just had enough of those trades where I stepped up to the plate for that big trade, and then with 10,000 shares, the bottom falls out, and I'm down, almost $1 a share, down 10 grand. Okay, so so I was looking back on January, and for what it's worth, January 1st of 2017 was when I funded my account with $583.15. All right, so the starting balance here was $583.15, and I produced $16,000 of profit, which no doubt was an impressive amount of money to make in that first month. Some people, by the way, like to see the broker statement to verify that. So I'll just show this to you here. This is my actual audit of my trading that began on January 1st of 2017, because this is when I started my small account challenge. So that first month, I actually got 2,746% return. Even though it wasn't like a crazy amount of money, 16,000, it was still a big percentage return. Now I've continued trading in this account for the last, 1, 2, 3, 4, 5, 6, 7, 8 years, and the account's still growing. It's over 10 million now in audited, verified gains. I'll remind you as always that my results are not typical, but my hope for an episode like this is that you're able to learn from my lessons, my mistakes that I've made, and from some of the turning points that I've had in my career, and that perhaps some of these could help you in your own trading. So anyways, January was 16,000. That was solid. I did, though, have, that one kind of bigger red day. Going into February, a $60,000 green month, which was great. A couple of big red days. And this is sort of the theme, is that I'm generally consistent, but then periodically I'm hitting losses that are bigger than my average green days. How many of you guys experience that? You've got, nice, decent green days, but then when you hit losses, they're, 3 times or 4 times what you're averaging on those green days. So this was kind of the theme through 2017. This was a good month in May. The red days were really small, but this was an exception, not the norm. And in fact, I didn't make even a lot in May. And this was the beginning of when things kind of slowed down. It was slow in June, only with 8,000 in profit. It was slow in July. It was slow in August. And then, as we know, it was red in September. So this was part of what was getting me so angry in September, was the fact that things had gotten really slow. And then sort of in the midst of them getting really slow, I end up, taking some big losses. And I feel like at that time, I just couldn't afford it. It was like, this isn't something that I could really tolerate right now. Okay, so since I knew that my top 25 biggest winners and losers had not accounted for a very substantial amount of profit over the last 10 months, I decided to kind of open up my filters a little bit more. And I said, well, let's look at winners that are bigger than $4,000 and then losers that are bigger than 2,000, right? So I'm kind of setting the bar just like a little bit wider, so, casting a wider net. And what I discovered here was that my winners that were 4,000 and up were $319,000. And this, of course, included the top 25. So I was like, nice. Okay, that's more in line with, what I was expecting. And then I look at the losers, which were $2,000 and up, and I realized that I had lost $361,000 in this same 10-month period. So I was actually down like 40 grand, $42,000. And I was like, wait a second, this is crazy. So you're telling me that if I look at all my winners of more than 4,000, which I felt like were like a solid winner, and I also look at all my losers of more than 2,000, in the last 10 months, I'm actually losing an average of $4,000 a month. So now I was really perplexed because I'm like, well, wait a second, then where is my profit coming from? So, well, the obvious place to look now is winners that are between $0 and 4,000, which I would consider not to be a home run, but just kind of like a base hit trade. So I was like, all right, well, I wasn't expecting to get down this far, but all right, let's just look at it. So now I'm looking at winners that are 0 to 4,000 and losers that are between 0 and 2,000. All right. And this is what I discovered right in here. My winners, $510,000 in the last 10 months. And my losers were only $156,000, which gave me a net profit of $354,000. Now, remember when I said I was only up about $300,000 in the last 10 months? So all of a sudden, I'm like, wait a second. If I focus right in here, meaning I'm focusing on winners between, basically $0 and $4,000 and losers of less than $2,000, I would be averaging, in fact, $4,000 more per month, even if I never had any more home run trades. And this really did confuse me because I was like, I can't really accept the fact that I could be making more money with smaller share size, because this was the thing that I also calculated. My average position sizes up here were about 15,000 shares. All right. Now, my average positions in this area were more in the range of 6 to 10,000 shares. So they were smaller positions. So I'm like, how am I making more money with smaller positions? That seems counterintuitive to what I would expect. Over the years, having thought about this more, with a smaller position, it's a lot easier emotionally to cut your losses. You can just let it go. You're like, it doesn't matter. And with a smaller position, it's also easier to move in and out of the market. You don't get as much slippage. You start trading with 15, 20,000, 25,000 shares, especially on a thinly traded stock, you could easily get 5, 8, even 10 cents of slippage. And that could be the difference between a break-even trade and a $2,000 or $3,000 losing trade. And then on the losing trades, it's the difference between losing only, let's say with 5,000 or 6,000 shares, maybe you lose 10 cents, you're down $600. You do that same trade with 15,000 shares, you're selling when the stock is dropping, you're getting a ton of slippage, and you're losing, let's say you lose 30 cents. All of a sudden you're down 4,500 on a trade that with only 6,000 shares would have been $600. And I think that was one of the big discoveries for me. So this was again in 2017. This was before the pandemic and before commission-free trading. So it was during a period of time when there wasn't as much volume in the market as there is today. So moving in and out of trades in those days was not as easy as it is now. So I think there are some things that are a little bit different, but the moral of the story and the big lesson for me was the realization that I actually would be making more money if I traded with smaller share size and did not try to swing for the fences. And so what I ended up doing coming out of this sort of slump that I was in here in August and September is I said, all right, well, let's see if I can apply this moving forward. So moving forward, I decided to reduce my share size. So I brought my share size back down. I became a lot more conservative, and I ended up focusing just on base hits. Now, what ended up happening was over the next 30 days, I had a nice stretch here that began, as you can see right here, on September 27th. So this was the turning point right here. So these were nice small days. And then going into October, look at this. This ended up being a no red October. Now, to be honest, I didn't have a lot of huge green days. I had a $5,000 day, but the rest of the days were in the range of, $2,000, $3,000. I finished up $35,000 here for the month of October. And I felt so confident. I felt on top of the world. My account was back at all-time highs. I was like, yes, I'm doing this. I go into November. I keep it up. Now, I'll say, as you could tell, I had a couple of setbacks. One of the things with this setback right here was that I had 2 incredible days. And these days were really interesting because this was actually not the result of swinging for home runs. This was actually the result of an error in my trading software, which was kind of crazy. So what happened there, I remember these days because on Wednesday the 15th, I get into this trade. And usually what I do, for those of you that are familiar, is I'll often press the buy button a couple of times. And I had just switched to new software, and the software that I was using was changing the position quantity based on the current number of shares that I had. So typically, if I'm getting into a position with 3,000 share positions, I'm going to buy once and twice, maybe 3 times. So I did that. I got in 1, 2, 3 times 9,000 shares. So I went kind of to the top of my window of share size, which is about 10,000 shares. And then I think I said, I was like, okay, I want to add to this position and go up to like 10,000 shares or something like that. And so I pressed the buy button, and I think I pressed it twice. And so it sent 2 more orders out for 9,000 shares. So now all of a sudden I accidentally sent out for a 27,000 share order. And I remember looking at the bid and being like, whoa, there's someone bidding on this stock. And it was my order. I didn't even realize it. So I didn't get a full fill on my order. I got a partial fill, and then the rest of it was sitting on the bid. Now the stock ends up going up over $1 a share, and I locked up $33,000, which I think at the time might have been one of my biggest green days that I had ever had. And I realized after the fact that I had this, this was nuts. Like, what just happened? And so I thought I figured out the problem, and I thought that I fixed it. And then literally the next day, it happened again. And it's just like, honestly, it was lucky that it happened on days when the market happened to be hot. Because if it happened on days when the market was really cold, I could have gotten destroyed. But the market was hot, and so I ended up having 2 huge green days. And then Friday, I ended up having kind of a bigger red day. And I don't recall what happened on this day here. I guess we could take a look at it and see where things went wrong. Yeah, so I went into the green and then dipped down into the red and then was down 5,000. This looks to me like a day where I fell victim to what I would call emotional hijack, because my final trade, let's see, what time of day was this? 11:50. So it's later in the morning, right? I went from green to red. I almost made it back to flat and then back to a little deeper red. And I think I probably took a high risk Hail Mary trade, hoping to get myself back to green and then flush deep into the red. I think this was a day of emotional hijack. And the fact is, when I look back in my trading, unfortunately, I do still fall victim to emotional hijack even today. So now this is 2017. So we go all the way forward to 2024. And, you'll see these nice long stretches of green days. But here in March of this year, emotional hijack on this day right here. It was actually 2 days of emotional hijack. And, I finished that week red 15,000. Now, one thing I would say about emotional hijack is that, contrary to, the focus here, which is on, this is very much strategy based. This is about figuring out essentially the analytics of your trading and modifying your strategy so you're doubling down on what's working and totally dropping what's not working. My discovery was learning that I was making a lot more money on base hits, and so I should stop focusing on trying to hit home runs and just go all in on base hits. But inevitably, what would sometimes happen is after a period of, 2, 3 weeks, whatever, 4 weeks that are consecutive green weeks, I'm doing really well. I have that day where, I step up for a base hit, but bad luck. I get caught in the news flush or a stock that announces like an offering or whatever it is. And with even small size, I'm down $5,000. And immediately it's like a kick in the teeth. And I'm angry, I'm frustrated, and I'm immediately hijacked by those emotions. And now I'm looking for another trade to try to recoup that loss as quickly as I can. We can look at this Monday here, the 11th, because this was a perfect example of it. I was in the red, in the green, and then gave it up here and then traded all the way to the end of the day. This is total emotional hijack, terrible emotional self-control. And then on this day, I came in swinging really hard and just got totally smoked on a trade where I took way too much risk and I took too many shares. And the reason I took so many shares on that was because I was trying to recoup the loss from the previous day. And so one thing that I've come to learn is that with trading, it's very common, even after years and years of consistency and success, to deviate away from what you know is sort of the rule of your strategy in moments of emotional hijack and emotional pressure, where you feel like you've made a mistake, you need to recoup those losses, and maybe today it's okay that I just take more size. Because the thing that happens is when you're in this kind of mindset of focusing on base hits, just nice, consistent base hit trading, when one of these happens, all the confidence and the good feelings you had right here are gone. And right here, you are feeling sad and you're angry, you're disappointed. And the fastest way to feel better is to be able to press, Control Z, undo the last trade and go back to right here. But unfortunately, as we know, the market doesn't work that way. So the only way is either to have a lucky trade that gets you right back to whole, or to accept reality right now that you got knocked down and it's going to take a little while to recover. And it's hard to accept that. Until you accept that, you'll keep swinging like this, and then that's when you can end up, going like this. And I've seen traders do that. I've seen traders have an excellent run of weeks, months, even years, and then a loss of confidence, stubbornness, frustration, and now from a place of emotional hijack, they're not trading the market, they're trading their P&L, and they just start stepping down. So, I think we're all going to be victim to this at some point because, listen, trading is hard and we're only human and we're trying to do something that's very, very difficult. I have also come to learn that most people in trading fail for one of two reasons. The first reason is because they don't have a strategy at all. Now, a lot of the people that came into the market during the pandemic, GameStop era and everything else, they had a lot of beginner's luck. It seemed like everything that they might have bought was going up and they didn't need a lot of strategy. Same with the dot-com bubble. But when the bubble burst and when the pandemic, when all of a sudden interest rates went up because of inflation, everything else, the market softened. And now people are like, whoa, do I actually know what I'm doing? And some people started to lose money. If you don't have a strategy, a system, a set of rules that you're going to follow every single day in your trading, you're not going to be able to do this for decades on end. You're not going to have beginner's luck that'll last that long. So the first reason most beginner traders fail is because they don't have a system or a strategy. Now, by the way, I will let you download the PDF of my small account strategy. You can download it. It's free. You can practice trading it on your own. And if it's helpful for you, I'm happy for that. If you decide to become a member of Warrior Trading, that's awesome. If you don't, that's okay too. There's going to be a link pinned to the top of the comments and linked in the description where you can download my small account strategy. So you can download a strategy. You do not have to be the traders that are in group number 1 who fail because they have no strategy. But then there's group number 2. The second reason people fail is they have a strategy, but they don't have the aptitude and the emotional wherewithal and the discipline to follow the rules of the strategy. And I'm telling you, sometimes it feels like I am barely holding it together myself because it is such a struggle on some of these days not to flip over my desk and just start slamming that buy button because I'm angry. But being able to have discipline and composure is absolutely what separates traders who make it long-term from those who don't. And not everyone has that attribute, that ability to be calm, cool, collected. I don't think that I naturally have it, but I've trained myself into it. And so there is hope. There is a chance that you can train it, even if that's not how you are naturally. So these are really, to me, the two most important things in trading: a strategy, set of rules and a system, and the discipline to follow it. But I want you to remind yourself that, yes, you're only human and you will have setbacks from time to time. And that's the thing. You'll be on a good track and then all of a sudden you'll have a little bit of a setback. So if we look at my trading here, we could just look at the last year. We can do the last like 18 months or whatever. Let's see. So we'll go to recent. No, I want to go to detailed. And I just want to show you the equity curve here. Just to kind of give you perspective that this is the reality, for me at least, of what it's like to be a trader. There's ups, but there's obviously downs. You can see these dips. And when I'm having downs, I get depressed. I get bummed out. And I start to feel like, man, the only way to recoup this loss quickly is to hit a home run. But base hit trading is how I have built my career. And even during the crazy markets of the pandemic, I was still trading, just focusing on base hits. The only difference there was that everything seemed to be bigger. I could take bigger share size. The base hits were bigger, but they were still, for the most part, base hits. So this is the way I trade. It's just slow and steady. And if we go back to, looks like if I do it like this, I could go into 2017. So we'll go to 2017 here. And this is what you'll notice. So I had this really strong first quarter of the year with a small account. And then I went into this period of going kind of, stagnant. I was going sideways. And it was because I kept having these bigger red days, right? If I wasn't having these bigger red days every couple of weeks, I would have been, making progress up here. And so this was the turning point right here. It was September 27th. That was the point where I said, all right, Ross, you got to focus on base hits, reduce your share size. And I realized it's so much easier to get in and out and to be cutthroat about cutting your losses when you trade with small size. You can be nimble, you can lock up these profits, and you can do really well. Now, I'll tell you that, as I said, during the pandemic, I did pull away a little bit with my share size and I got more aggressive. And that was the right move for that market. But even today, right now, even though I've made more than $10 million of trading, I start each day with a maximum position of 5,000 shares until I have made more than $1,000. I start each day at zero because I'm a day trader. And I set my max loss. I don't like to go down more than $5,000. But to be honest, because I start each day with $5,000 position size, the only way I can go down 5,000 is either losing a full dollar a share on one trade, which is terrible, or more likely having like 3 losers like this where it's just not working. And if that happens, then that's fine. I'm out of the market. But these are still, for me, reasonably small days that are red. And as long as each one of these losses is more in the range of $1,500, I can tolerate 3 losses that total out to $4,500. But on the flip side, on a day when things start working with 1 or 2 trades, next thing you know, I'm up $1,500, $1,600. And then as soon as I'm up more than $1,000, I take off that cap. I could start taking a slightly bigger size up towards 10,000, 15,000 shares max, generally speaking. And then, I can make my way up towards my daily goal, which is 5,000. I like to set my daily goal the same as my max loss. I don't want to lose more in one day than I can make in one day. So if I'm averaging only, let's say, 2,500 a day in a current market, I'll tighten my max loss to that same amount. And I'll set that as my new target. So this is dynamic. I do adjust it based on market conditions, and I adjust it based on the price range stock I'm trading. Naturally, 10,000 shares of GameStop is not the same as 10,000 shares of a 30-cent stock or something like that. So, you do have to be able to kind of give this some wiggle room. But I think one of the things that I just want to emphasize for you is that what I've learned in my career is that trading really is a marathon in the truest sense of the word, that you fight every day. It's a struggle. It's not easy. It's not exactly fun, but it can be rewarding. And those who find success are the ones ultimately who are very disciplined. I hope you found this episode helpful. If you did, I hope you hit that thumbs up. I hope you subscribe to the channel. Feel free, as always, to download my small account strategy PDF. And I'll remind you, as always, trading is risky. My results aren't typical, so manage your risk, take it slow, and I'll see you here for the next episode real soon.